Are you a real estate owner and you also use a professional property management company to manage your rental properties? Well, in this video, what I'm going to be showing you is how you can interact with that professional property management company and still manage your properties on your own by managing the property manager. All right, let's get started. Okay, so what I wanted to cover in this video is a strategy whereby you've set up your own structure and you have a rental real estate in many different states, and you're using a professional property manager to run or handle those properties for you. Now, each month you receive an owner statement. It's typically sent to you or to your entities, and of course the money comes with it via wire. Well, I've received a couple of questions that have come up. They're wondering, hey, what happens if I want to set up my own property management company and I'm still using a professional property management company? What does that do to my overall structure? Well, in this video, that's what I'm going to be showing you right now, is how you can interact with a professional PM when you're using your own PM. Now, if you're wondering for context purposes, what am I getting at? Let's assume that you have a structure that looks like this, right? So I have, let's say 5 limited liability companies I've set up, and I have properties in each of these LLCs. Now, assume further that we've created our Wyoming Holding LLC down here, as you've seen me draw many times, where we have Wyoming here, you're down here owning the Wyoming LLC, and the Wyoming LLC owns each of these separate property LLCs. Now, these 3 limited liability companies here are located in Oklahoma. You don't live in Oklahoma, so it makes it very difficult for you to try to manage an asset in Oklahoma. So you're using a professional property management company over here to handle all your Oklahoma properties. On the other side, you live in Georgia. So you have these properties here in Georgia, limited liability companies that you're actually managing yourself. And you've decided, you've set up a limited liability company up here to manage these 2 rentals. Now, why would I have a management company to manage my rentals? What comes down to tax planning. I've got many more videos on that particular subject right there. But what I want to show you is how this company right here, if you've done this already, how it can interact with this company over here. Now, if you have not set up a management company, listen, I'm going to have a link to a video that you can click on. Look, it'll show up right now. You'll see it on the screen. If you want to go to that video after you watch this, definitely do it, and I'll explain why you may want to consider setting up your own management company for your rentals. All right, so let's go forwards with this. So now that you have this structure in place and you've set this up, because this is how this needs to work. You can't do this without this entity right here in play. So I have my limited liability company set up here. Because it's managing properties in Georgia, it will be located in Georgia. So for those of you wondering, hey, Clint, is that a Wyoming or Nevada or Delaware? No, it's not. Remember, you live in Georgia, and if your property management company is managing your real estate in Georgia, or just, put in the state, if you're managing it through your own entity, then that entity needs to be registered in that state. So now I've got my Georgia entity there. It's not managing my Oklahoma properties, but this professional property management entity is. Now, depending on your structure and how you work with this professional property manager, you may have your owner statement sent to the Wyoming LLC on a monthly basis. Or maybe you have this manager is willing to break it up and send one owner statement with the wire to separate LLCs on a monthly basis. In my personal experience, that's typically not the case. The property manager will only send me, at least on my portfolios, they just want to send out one wire every month with one owner statement covering all the properties. So I tend to have that owner statement flow to this Wyoming LLC, which is the holding company. Now, if I had a management entity up here, well, actually I do. I have managed quite a few of my properties in North Carolina through a entity we've set up. But if you've set this entity up, what you could do with your Oklahoma properties here is you could direct your property manager now to instead send the owner statement to your property management entity. Okay, so you're going to direct them to send it to this Georgia LLC, the orange box up here. Say, hey, send it here for now on. Now, why am I doing that? Why would I even want to have my rental income move from this entity to the orange box? Well, the reason you'd want to set that up is to get the income out of your personal name, so you can look then for some opportunities for having, or for some tax planning. What I mean by that is that normally you have these 2 here where you're paying a fee every month. So let's assume that you've structured it where your LLC here in Georgia charges a 10% monthly fee to manage your 2 rentals. So you have money flowing up into this company on a monthly basis. Let's assume that that's $600 a month that your Georgia property management company is earning. Well, I want more money up there because that $600 that flows up to my property management company, it's not flowing down to me. And I found ways to expense it out for my benefit, which is tax deductible to this business entity. And so if I had more income, I have more tax planning opportunities. But I'm limited on how much income I have because I only have 2 properties here in Georgia, and the most I'm charging is $600 for both of those properties. So by using that professional property manager here to send your rental income from Oklahoma into this entity, and let's assume that your monthly owner statement that you receive with the wire is $3K a month. So when that comes into your company here, what you're going to do is take another administrative fee off the top. So this guy's already taken his 10%. You get $3,000 left over. It flows into here, and maybe you throw another 7% on top of that. So 7% of the $3,000, you have $210 that you'll keep now here. So now you're making $800 a month at that level. So that creates, as I stated earlier, some additional opportunities for you. Okay, so if you collect the income there, then the question that's going to come up, if this entity, for instance, is set up to be treated as a C corporation for federal tax purposes. Again, watch the video. I'm going to explain why this is. And again, if you didn't catch the link the first time, I'll put it in the show notes. So why is it that this one, are we going to expense all this money out and we're keeping that money there? So we want, when this 3K comes in, all right, so what I've collected here in my company is I received $600 from the managing the Georgia properties. I brought in $3,000 from the property management company over here that handles my Oklahoma properties. But this is not income to your Georgia entity. Okay? The reason it's not income is because it hasn't earned it. You've just collected it on behalf of, right, these 3 red boxes that everything's owed to you. So you've collected it on behalf of these entities right here. The only income to that property management entity is the $210 that you take off the top. So at the end of the month, what you're really looking at here is the total income to that corporation is $810. But if you look at your bank account, you'll find that it has $3,600 in there. That is because the difference is owed to this entity here. So what you'll do is you collect the owner statement here, the wire comes into your account. After that, after you take out your proceeds that you've chosen, the $210 in my example, then you'll send that same owner statement back to this box here, but you're going to add an additional line item. You're going to put this additional service charge on top of that your company is charging to deal with the professional property management entity that you're using to handle these 3 rentals. So a lot of people get this confused and they think, hey, it's going to complicate my life. No, it will not. All you're doing is moving the owner statement to this entity, and then you're funneling it back down here, and you're just adding an additional line item, and then you can give that to your tax preparer, your bookkeeper, and they'll work all that out for you on the books. So I think it's a great way if you have set up your own property management entity and you're still using a professional property manager for your other properties. Hey, get that entity in the mix. And the thing I like about this strategy as well is that now you've centralized everything. So rather than having part of it going to your property management company that you've created and then another owner statement going down to the Wyoming LLC, it's now going into one entity. So I know there's going to be one question that some of you will ask after you watch this video, and that is, hey, Clint, can I just keep the money going directly to the Wyoming LLC and then expense that $210 up to the professional or my own property management entity? You can do that as well. That's another option you have if you'd like to do it that way. At the end of the day, what is the goal? To ensure that our property management company that we've created, which is the C-Corp, is collecting the money so then we can expense it out. Hey guys, if you want to learn more strategies like this, I'd love to invite you to our one-day tax and asset protection workshop. We host these workshops on Saturdays. I have a link in the show notes for you. You can click on that link. It's completely free. We've been doing this for over 23 years. We have a ton of experience in working with real estate investors, small business owners, showing them how to utilize entities to take advantage of the tax code and protect their assets at the same time and help grow their business. I'd love to have you join me on that one-day event. Not only will we educate you on the asset protection side and the tax planning side, we're also bringing together our team of attorneys and tax professionals who will be there on the Q&A answering your individualized questions about how entities can help you do more with your own planning. Like the video, be sure to hit the like button and take care.